Yeah, this will take around 1 minute. 2 second का delay.
All right. Good morning, everyone. Uh, in today's webinar, Jay will be taking you through rollover and how to find the best setups. Jay, good morning. And yes, we are live across all the social media platforms. To all those who are on watching us on Twitter and YouTube, you can still come on Zoom and you can ask the questions also. The Zoom link has been posted in the channel in the profile. So just click on that, register and join. And those who are comfortable watching us on live, it's fine. Yeah. So Jay, good morning. And yes, to all the viewers, good morning. And what we'll be doing is Jay will be initially taking you through the presentation and then we'll open up for the Q&A. Okay, so first let him go through the presentation, which will be around for 30 to 40 minutes, and then we'll open up the Q&A. And those who have still not signed up on Strike, and if you have not used Strike, this is the right time. You'll get a 7 days free trial. Just go to web.strike.money and sign up for a free trial. And yes, please do it. If you're still before we start the webinar, you still have time. You can go to web.strike.money and sign up immediately. So Jay, good morning, and yes, you can start.
Sure, sure. I hope I'm audible, John.
Yes, absolutely.
Okay.
To viewers, please confirm whether Jay is audible. Yeah, perfect.
Okay, great. And
Yeah.
so while I'm presenting, please make sure that you don't scribble on the screen. It will break the flow. So that is just a request. And later on we'll open the floor for Q&A. At that point of time, you can ask whatever queries you have. But while I'm explaining, please don't interrupt because there might be many questions that might be answered as I explain things. Okay. So what we'll do is that we'll start right from the start. So today, by the way, for people who don't know, today we are going to uh, I'm doing a webinar on rollover. Okay, we are doing the webinar on rollover. In this case, this was one unique thing that I had learned, I think, post-COVID, that, how the bigger players are positioned themselves. Because, see, typically when people try to bet in futures, especially the big players, they don't try to buy it for 1 day, 2 day, 5 days. Okay, they try to bet for a medium term, and I'll show you how it is useful from the medium term perspective and how people are positioned that way. Also, this thing is not just useful for the futures trader, but it is also very, very helpful for the cash guys as well. Especially who have this time horizon of say 3 months to 6 months to 12 months. And other than that, in fact, the way this can be beneficial for the short term trader is that you broadly know that this is what the trend is going to play out from the medium term perspective. And then, once you figure out those kind of stocks, all you just need to do is that, whenever there is a bullish crossover or prices retrace back to the important support levels, there you have to try and get in with a minimum risk. So, that is again rewarding. So I'll try to, share it in all the ways that you can play. Okay. Frankly, I am not so much, into 1 day, 2 day, but this is more from a swing perspective and from a medium term perspective, where this is extremely helpful. And it is not just the theory part that, but I can give you with live examples as well, where it had played out and where those things are happening. So I'm very sure you will find it very, very helpful. and maybe to the people who might have not seen it earlier. Who might have not seen these rollover thing earlier, but this will surely open your eyes and maybe make you think that where is it that those patterns are occurring and where is it that opportunities are there, because this requires a bit of patience to play out. Okay, so let's get quickly started. See, I will not dwell very deep because in most of the webinars, and in fact, so just to let you know, today we are doing a webinar on rollover, which on strike, if you go, you have to go to futures, you have to go to rollover, and within rollover, there is this, radio button of early positioning. Once you go over there, this is the screen that we are talking about. In fact, in help, okay, so this presentation, what I have made, that only I have explained it over here in 30 minutes time. So over there, I've tried to get in detail about it. So I'll broadly touch upon, all the important aspects. And I want to show you more example because I think, this is the fifth or sixth webinar that we are doing on rollover analysis. So I'm believing that many of the people might be aware with this concept as well, vaguely. But as in when I explain you all with more examples, I'm sure you'll find. You will be able to relate it even better. So see, the thing is with futures data is that you get price and you get open interest. Okay, open interest is nothing but you can say how many contracts in absolute terms, in number terms, which is basically lot size into the number of contracts that are open. That is open interest. Okay, so there are certain ways to interpret open interest and price. Okay, which means that when the prices are up, the open interest is up, it is believed that people are going long, and that is why it is interpreted as bullish. Okay, when when prices are up, Sandeep, I request you not to fidget with the screen. Okay, else we'll have to kick you. Please make sure not to do that again. Uh, when prices are up and the open interest is down, this means many people are short in the stock, and those shorts are getting covered, due to which the prices are rising and the open interest is falling, and this is what we call it as short covering rally, and this again is bullish. And as we focus towards as we progress towards this webinar, you will realize that how important this is to catch. Okay, because once you catch this phase, this is the most rewarding phase because there the moves are very swift, and I'll come to in a while why you need to catch it during this phase. So the other one is that when the prices are down and the open interest is up, it means it is a short built up, which means that the stock is falling and people are shorting more and more, and that is why it means it's a short built up. Sometimes what happens is that the stock has gone up way too fast, and a lot of people are into it. But when the prices fall, the people who are long, they get scared and they cover, and that is what we call it as long unwinding. Okay, so these are the four important interpretation that is there for price and open interest. And again, I'm saying that this will be our focus area because this is the one that is most rewarding. Okay, so what happens usually is that this is what happens almost in every stock. So there are phases. Okay, which means that phase one is that assume that open interest is towards the lowest. Okay, so what will happen is that when the prices rise higher, open interest will rise higher. Okay, and this is the phase of long buildup. Then what will happen is that as the prices decline, so all the weak hands, they try to cut their position. Okay, and due to which it leads to long unwinding, which means people who have gone long over here, they tend to unwind their position. That leads to a decline in open interest as well. Okay, this is OI, this is price. Then what happens is that certain important levels get breached technically, and or maybe some news happens and so on, and the prices decline fast. Okay, now when this prices decline, what it leads to is renewed surge in open interest, and here now a lot of people are shorting, and in fact the ones who are long over here, they also tend to cover. So because of they are already long, what they end up doing is that they cover their long position and they keep adding more shorts. Okay, now of course you may say that for every long there is a short, but we always look at it in price conjunction. Okay, because prices are going down, open interest is rising higher, so we assume that the prices there is a short built up that is there in the system. Okay, so this short built up is nothing but a third phase. Okay, and short covering is the one that is that is the fourth phase. Now this is more important, but identifying where there is extreme short built up and keeping them on our watch list becomes very, very helpful. Okay, because this is what eventually leads to this move. So as I told you, you need a lot of patience also to play this. It is not extremely easy as it may look like, but it might test your patience and it might test your conviction. But I'll try to give you few how do we say, few key things that you need to watch out for, or few confirmations that you need. That's when maybe things can turn in your favor. So yeah. So these are the four phases. So again, then typically what happens is that because there is a lot of short that is built up and there is a lot of pessimism in the system. Market always swing from one extreme to the other extreme. So then eventually things will turn around and it will start rising higher, and this strong move that happens is typically due to shorts getting squeezed, and that usually result into very fast and furious up move. Okay, so this is the phase that is very, very rewarding. Now, one more type of, see, open interest, what happens is that there are certain peculiar patterns that we see. Okay. And when the open interest is where, this is what this chart shows. This slide shows that what are the points where you need to take action, or you need to be very, very watchful of those stocks. Okay. So there are two scenarios, of course, that open interest can either be high at the higher end of the range or lower end of the range. Okay. So when open interest is at the higher end of the range, you have to understand whether this high open interest, okay, what does it mean? Will it lead to trend reversal or trend continuation? Now, of course, this I'll explain you with the example so that you understand it much better. But basically, when the open interest is very high, you need to understand what price formation is also happening. Okay, because if at all there is a big multi-year breakout that is going to occur and the open interest is very high, then it is possible that open interest will further rise higher, and there will be renewed interest in the stock, which can push the open interest very high, in which case you need to be with the trend. In some cases, what will happen is that open interest will be so high due to extreme pessimism, and it will come to important medium to long term supports from where a turnaround has to happen, okay, at some point. So usually these are the ones which are very rewarding. Okay, but identifying this is of course requires an art and need patience as well. I'm telling you patience because I'll show you the examples where eventually the views went right, but it required a brave heart to be in those stocks, or if not be in those stocks, then still be in the, I mean, still keep those in the watch list and attempting to go long. Okay. The last one is when the open interest is lower. Okay, which means OI is towards the lower end. So when OI is at lower end, it tells you that people are not interested in this stock. But because the open interest is very low, at some point of time, some trending move is likely to happen. Okay, so you have to keep them also on the radar and see when is it that the open interest uptick is happening. Okay, when you see such open interest uptick happening, then you can probably say that there is some trending move that is likely to happen. Okay, so this might require some additional patience than this, because over here, though, you know what the trend is and what people are doing. Here, it will be a mystery, and you don't know whether it is going to break out or break down. So that is why. So over here, I mean, when you want to pick up trend, uh, you will need to understand what is the trend of that particular stock. Okay. Uh, so of course, let me come here, explain you with example to get it better. But basically, these are the important nuances of open interest that you need to understand. Okay, when open interest is high, it means two possibilities: that either a stock is going to break out from its multi-year range or something, and that is why the trend is likely to continue. In which case, open interest can get much higher, or open interest is very high and the stock is at a medium to long term support that is going to lead to a trend reversal, and these are very rewarding opportunities. And when the open interest is low, okay, it usually tells you people are not interested in this stock. At some point of time, some trend is likely to pick up. Okay, when, how, we don't know, but these are the ones where people are positioned absolutely neutral on that stock. So again, I mean, you have to keep them on the radar. Okay. Now I'll explain you with some examples. So see, over here you can see that there was a major breakdown that occurred, and over here, if you see the 5-6 years of data, the open interest was very high. Okay. Now, this, if you see over here, open interest was high, it lead to a trend reversal. Over here also, if you see, I mean, it was in this shorting where open interest was very high, and then it led to a short covering rally, and you saw the price play out that way. But this time around, what happened was that there was this major support zone which was there that had broken on the downside, and over there open interest rose as well. So after that, time to time there were some pullbacks, but the open interest was at the elevated level, and as the decline used to start, the open interest used to rise again. Okay, then there used to be a pullback, there used to be some short covering, then again prices used to go down, and open interest used to surge, and that way a lot of shorting was happening over here. So in this case, it was a case of a trend continuation, which means open interest was already high, and after that, some range broke on the downside, and the open interest kept rising higher. Now this is the scenario where prices rise higher, but open interest is going down. Okay, this is sort of telling you that people are cashing out of their position. Okay, and they are now kind of turning neutral, because you see over here, prices went higher. So all this while, when the open interest was, I mean, the prices were rising higher, open interest was intact, right? But after this high, in fact around this high only, open interest started reducing, right? So at the new high, open interest was not that high. That means people are more or less cashing out from their position and they are turning neutral. And after that, in this decline, you see there is a spike in open interest, right? So this is nothing but divergence between price and open interest. So if at all you see a price action this way, price is going down and open interest also going down, it tells you that people are people who were extremely short over here, they are kind of unwinding their position and, turning more or less neutral or less bearish at least. Okay. The third scenario is where the open interest is unusually low. Okay. And this is what we saw in Lupin around this COVID time, where the open interest was very low and the prices had already fallen 60-70%. Now, it means that people are very much neutral on the stock. And as the prices picked up, okay, the open interest also started to rise, and this led to a good trending move. And if you see, the stock had almost double in few months. Of course, it was also because, COVID had due to COVID, a lot of, share prices had fallen for many stocks, to north of 60-70% as well. But, open interest being very low tells you that at least people are not bearish on this stock anymore. Else they would have shorted left, right, and center, the stock. And a lot of this cues we end up getting in rollover expiry, because they don't roll over their position, and those are the stuff that get caught when we do the early positioning analysis. Okay. And the last scenario is that the open interest is. Sorry, just give me a minute. So over here, in this case, you can see that the open interest was very low. Okay. And then as the trend started picking, the open interest rose higher. And you could see that over here, basically there was a bigger gap area that was there. The prices got filled over here. Then it formed a triangular pattern. And after that, there was a breakdown. And from 1700, Infi fell to almost around 1200 or so. And that's where open interest shot up higher. Okay. So, these are the kind of variations that you see. Now, as I told you, see, these are the most important thing that you need to figure out. Okay. One is that where is it that the open interest is very high? Okay. And where is it that a trend reversal is likely to happen? And once the trend reversal happens, that means it can either be long unwinding or short covering. Okay. So, as I told you, most rewarding is this. And this is what, for short covering, you need to understand that this is the pattern, which means prices rise higher and open interest rises higher. Okay. So this is what, is a pattern of short covering. Now, if you come to strike, okay, as I told you, if you go in the help button, I have explained over here almost for 20 minutes or so, in fact, 30 minutes. In fact, there are some more examples also over here, which were different at that point. Now, the market situations are different. So, I would use some different examples. But as you see, to reach to the early positioning page, you need to hover over here, go to futures, go to rollover, and within rollover, go to early positioning. Okay. So here you will see an option of table, and here you will see an option of chart. So what we have done is that even if you go to the chart, basically, this is expiry to expiry chart. And at the bottom that you see is the rollover at the start of every month. So notice over here what is written over here, okay, which is open interest at the beginning of new expiry, which means that, say for example, the expiry, this Jan ka expiry happened on 30th. Okay. So 30th ki evening ko, okay, in the evening of that expiry day, this screen gets updated. This screen gets updated only once in a month at the end of expiry. Okay. So here you see, this as 2701, because this entire data that is there, which we are presenting, that is for the expiry of 27/01/2026, which means at the start of new expiry for Jan, how are people positioned themselves for a particular stock. Okay. Now, what we have done is that now I'll explain you the logic why we have given all these data points. We want to basically see a trend, how the trend has been for the past 12 months. Because sometimes, the number might look unusually high, but when you see the past trends, you will realize that this is not an outlier. I mean, itna to data, I mean, itna to open interest normally bhi rehta tha, right? So that is why, we have given a trend. Okay. When you see these kind of trend, where it was 7 lakh 65, 12, 19, 24, 20. So over here, if you see, it was stable, right? And now suddenly with a 10% decline, there is a 74% open interest surge. That means a lot of people have shorted this stock, okay, which is TI India. So that is why we have given this. Now, there are two ways you can filter the stocks. One is checking month on month OI change, which means where the built up is happening. So based on the price action, you decide whether it's a long build up or a short build up. Okay. But ideally, this is the way, you need to interpret it, which is that the OI change, if it's very high, along with price change, which is also very high, then, it kind of tells you that a lot of people are short in that. Okay. Now, as I told you, the important part first is to analyze where there is short and then wait for the confirmation so that you can reap the benefit of short covering. Okay. But of course, when it is a short build-up, you also need to understand whether there is a trend breakdown that is happening, or is it that those prices are at a medium to long term supports, and that's where it is going to get interesting. So I'll try to give you some examples. Okay. Now let's try and catch it only through this. So see, when I told you the importance of this data, right? A 12-month average, because it tells you which are the outliers. Now, you see something like, say, for example, Adani Enterprise. Okay. You can see over here that the surge is 52%, right? But when you see in the past, somewhere around April 2025, you had, 2 crore 40 lakh shares approx, right? So it is not that ye all-time high open interest hai or something like that, right? But at the same time, when you see, say, something like, where is it that the open interest is high? Okay, you see something like this, UPL. Consistently, the open interest is rising. So this is what a 12-month trend can tell you. Okay. And over here, in fact, it has gone up. So that means people are going long in this. And this, kind of tells you a story of this stock. Okay. So this is how you would want to filter out, where are the stocks which are going long. I mean, where, we are seeing long, where we are seeing short. Earlier I had refrained from giving a interpretation because of this part. I mean, see, what I usually recommend people is to find a phase where we are in a short build up so that it comes on your radar for your short covering. But what ends up happening is that every short build up may not end up becoming a long position, because there might be some things that they might just be breaking the trend, like we saw in UPL earlier, right? So what might end up happening is that people may look for shorts. Okay, they'll keep on their radar, and then they will end up losing money over there. And that's why I was refraining to put an interpretation, but we have got a lot of requests for that. So we are going to put that. I mean, in a new implementation, we are going to put that so that it can become a little easy for you. But I'm again telling you, you need to understand short built up may is a is that short built up a trend continuation or a trend reversal? Because that is the thing that will help you, to find, basically to find a good stock, where the move is happening. Now, similarly, I told you that short covering are the rewarding ones, right? I mean, if you know, and if you all have attended the sessions, maybe, I don't know, maybe few months back, I was consistently saying that IT has a lot of shorts in it. Okay, has a lot of shorts in it. So, see, think of early positioning as month over month data. Okay, so every month में एक बार it gets captured. Similarly, if you want to see the price action happening every day along with the open interest, for that, what you have to do is that go to futures, go to OI interpretation, that is below the rollover. Okay, go to OI interpretation, and here you can type any name. Okay, TCS, and you see what was happening. And this is true for all the IT stocks, by the way, not just this one, TCS. But what you see is, uh, open interest at an extreme high. So mind you, we have the data since 2012. Okay. And you see, somewhere around this point was the highest open interest, right? You see over here, the open interest surged even more. What eventually happened was that an important major medium to long term support level was getting tested, and from there, Nifty has been lackluster, right? But even despite of that, IT may TCS has gone up 8-10%, right? If you see any other stocks, say Wipro, again a similar story over there, right? Extreme shorts, and now there seems to be a good short covering rally that we have seen. Okay, and it is now coming back towards the previous high. But of course, there is still some more shorts that are left in the system. So need to see how things unfold. See, right now we have to understand that we are getting into the result season. So be a little careful with that, because the open interest scenario can change completely. But usually try to see the trend post any event, which means that, if the open interest was very high, for example, and stock posted a good result and it saw a short covering and some important levels breached on the upside, then there is a very high chance that that trend is going to play out. Okay, but now you see over here that there is a short covering move that has already played out, right? This was around 220, it has gone to 267. That is like a 20% kind of move. So here, be careful, wait for the results to play out. Say for example, after the result this high gets broken, okay, and people do end up forming some long position as well. So then what will happen is that there will be a tug of war between bulls and bears, and since the price action be favorable for bulls, they might end up adding longs, and plus you will get a blend of short covering rally as well, because many people are still short that are stuck. Okay, so that's where, like I told you, these are all cycles, right? You need to catch it over here. Then, what will happen is that prices go up, prices go down. Okay. And then the initial recovery phase will be due to short covering. And then due to short covering, some important technical levels will break and people will start going long. And that's where, this becomes very rewarding. Okay. So yeah, what you see over here is that there is a classic short covering rally that is playing out. Okay. Now, which are the ones that have been seeing extreme short positions, right? So one that you saw over here was basically Keynes. 6 lakh has become 28, but I think this is not the right figure. But if you see Dixon, okay, you see the trend over here. 11 lakh has become 28 lakh. Okay. and you see that there was a price change of 18% in a week, in a month. Okay, so when you see the chart of this, you will realize that there is a lot of short positions that have now been built in Dixon. Okay, what you see over here is this. It started over here. This was the open interest, and this was the break of open interest. After that, there was a very strong surge over there. Now, what is happening is that it is coming to an important support level. Now, I'm not sure whether this is going to turn around or no. And this is where I'll tell you, what are the things that you need to watch out for. But if at all, I draw a parallel channel. Okay, let me precisely do it. So this is the parallel channel which it is right now trading at. Okay. Apart from that, I also do like to see what is the Fibonacci retracement and so on. It helps to get a perspective about the stock. Now you can see that it has gone below 38.2 and there is a risk of 50% also getting retraced, which is then, back towards this previous low. Okay. So I'll be mindful of this stock. I'll probably keep this in radar, but be mindful of this stock. Now, the good part that because this is web based, so you can open multiple tabs. What I can do is that I can go to Dixon and go to the RMI setup. Now, for all those people who are not aware about the RMI setup, basically we look at averages and the momentum setup. Okay, so when will be the point where there will be signs of a turnaround? When the prices move above this average. Now you might say that, boss, right now it is at 12,000. You're telling me to enter after 13,600. Now please understand that these are all dynamic levels. It will keep coming down. What will happen is that the stock may end up forming base or something like that, and at that point you will see average is also coming down, and at some point you will end up getting those reversals. When those reversals happen, it is usually very rewarding. Okay, now let me just give you the taste of finding where the lot of short positions are. Okay, because that's when I told you that you end up making good money, right? So and also, while you're trying to spot where the big shorts are, you also need to understand that open interest can go to any levels. Okay, there is no particular cap as such, because when there are market wide limits that are applied to a stock, it is including call, put, and futures. Okay, so that's why the mix can be anything, and that's why it is not easy to predict what the top can be. So if you see a case of Sun Pharma, the open interest kept rising higher in this entire decline. Okay. So in between, there were big bouts of recovery as well, which were almost like a 50, 70, 80% kind of move as well. But, they kept faltering until 2020, where there was a major short that was there. Of course, COVID happened. And then after you see, and like I told you, these are all medium term kind of moves. You ended up seeing a very sharp move, based on the short covering rally. Okay, and now the open interest is being very low. So low open interest में क्या होता है कि whenever it comes to the lower end, it sees some short position which again get covered, and that triggers a short covering rally. Okay. And this is how a trend continuation generally happens. Open interest will be low. Then again, there will be some shorting that may end up happening, and some important levels reach. And after that, a short covering rally triggers, and that will keep the open interest down. Or it will be the other way down around, where the open interest is low, prices rise higher, open interest rise higher, and then in a correction there will be long unwinding, where again open interest will come down, and this cycle will keep going on. Okay, so that's why, like I told you, you just need to identify where there are major shorts, okay, and where the open interest is still very high, because this trend is likely to then pick up for next few weeks, few months, or Yeah, I mean few months, or it can even go till a year or so. So that is the beauty of that. I mean, I've given this example often. ITC, this was much hated stock earlier. Okay, what you saw over here was huge surge in open interest. Okay, forget about what happened after 2022, but you see this chart, huge surge in open interest. And when you dissect it, going internally, so one more thing is that if you want to find the data, I mean, on a micro level, sorry, yeah, you can go over here, you go to this button, and you can precisely see what is happening. Okay, so you can see that in the last 2 days there has been 36% open interest built up. People have shorted around this range, basically this range, right? So this is the place until which, even if it is not broken, bears will still be comfortable because they have shorted a lot around this zone. Okay, it's only when the prices go above this zone or breaks this high, that's when it will make them nervous, and it might lead to short covering. So if you want a granular data of what is happening, you just need to scroll over here and understand where is it that long built up or short built up is happening. Okay, so in ITC, if you see after 2022, okay, there was huge surge in open interest and the pessimism was at its peak, right? I mean, no one was ready to buy ITC because it was a dud stock and so on. After that, while the markets did nothing or fell also in those scenario, I mean, this stock literally doubled, more than doubled in 2 years, right? And that was all entirely on the back of short covering. Now over here, it was hotel demerger, and that's why there was I mean, unusually low open interest. But again, what you see over here is that, when this decline was happening, there was a surge in open interest. Okay. And over here also, while it was consolidating and so on, it was around the highs. But in this decline, there was this surge in open interest that happened, which led to a breakout. So in this case, the high open interest now is due to the short position, and this was the trend breakdown that had happened in ITC, right? This was the trend breakdown that happened in ITC, and it just fell apart. But the interesting fact is that it is again coming almost back towards its previous high. Okay. Now, please understand, I mean, please see over here as well, when the open interest was very high, it did form some consolidation pattern correction and so on. And only after that, it had rallied. So it is very much possible that, say, ITC, does something like this, in that, the open interest again surges higher. And at some point of time, it will come to a very reasonable level where even long-term investors might end up thinking that it's a good opportunity, and there will be so negativity around the stock that it can again lead to the short covering rallies. Okay, and just to let you know, these things keep happening time and again. Okay, आई मीन यू माइट से दैट अरे ये तो वन ऑफ है, पहले हो गया, अभी ऐसा नहीं होगा. इट इज नॉट द केस. आई मीन यू सी समथिंग लाइक इन्फी, it happens time and again. I mean, it has happened time and again in this stock. You see this correction, open interest surge, then rise is on the back of short covering. Okay, over here all this was happening. Then this was the example that I was giving, where it was basically due to this short, there was a surge in open interest. After that, there was a big move that led to a short covering. But again, in this fall, it further rose the open interest higher. Okay. And notice what happened. There were more open interest over here than over here, which means people at a higher bottom are more negative on Infosys, because you notice whenever the surge of open interest was happening, it was due to the prices falling. Even over here, prices fall, open interest surge. Okay. And now what we can sense it is that still the shorts are not covered yet. Now, but as I told you, I mean, we are coming to a result season. So look at it post result how people are positioned over here. But one thing I can tell you is that because open interest is still at an extreme, there can be either side any move. I mean, if the prices lead to a negative surprise, it may end up falling as well, which may again push the open interest towards the higher level. But if at all, I mean, the chances of positive surprises are more over here because people are already short over here, and so far the bulls have a firmer grip. Okay, so all you would need is that prices to break above this range and sustain above it, and you of course need to see what the trend is. So say for example over here, if I do infi for example, okay, what I see is that on daily chart it is trending higher, which is good sign. Even on the weekly it is above the averages, so this is again a good sign. Okay, on monthly I am not sure what is the case. Yeah, see, in monthly what is happening is that it is trying to turn around, it is again back to the averages, and there can be a bullish crossover. So monthly charts are encouraging, people are positioned bearish over here. Okay, if at all we end up seeing a positive surprise in Infosys, my bias would be to think that it will rise higher. Okay, that is because purely because how people are positioned, plus I am seeing the technical setup which is there in Infosys. Okay, and that is kind of encouraging me to think that can there be a positive surprise? If yes, will the short sellers be caught off guard? I think yes. Okay, so that's where you need to watch out for. Okay, as I'm telling you again repeatedly that wait for the results to play out as well. Don't try to preempt. I mean, already if you see, the stock has moved from 1400 to almost around 1693 levels or so. So in fact the low was 1410, now it is 1643 or so. So in this dull market also, it has ended up rising 10%. So be a little careful. Okay, because it is also now running into resistance, and plus I think the final resistance will be the 61.8% retracement level, which is say around this 1750 mark. I think once 1750 breaks on the upside, I would have no doubt but to think that it will go back towards the upper end of the range or even higher. And depending how the shorts are positioned at that point of time, it will kind of lead to those big moves. So that's what I'm guessing. Okay, but this is how you can look at the rollover data and try and understand where what is happening. Okay, because now you see over here TCS, Tata Elxsi, similar example. In fact, I saw ABB also, and it looked a little interesting. See, what I'm trying to see over here is that where is it that the now I'm trying to catch where the short coverings are actually happening. Open interest is down, okay, and you see that prices have risen higher. Okay, so now if I see ABB in the OI interpretation, I'll realize that open interest is at a very high level, and you can see now people are kind of unwinding their position. So at least the ones who are short, they are now probably not so confident about shorts being I mean shorts playing out anymore, because now the stock has become subdued. In fact, you imagine that the market was, I mean, broader market was falling and so on, but the stock is very stable. And the interesting part is that when you end up looking the chart of ABB, you will realize that at a monthly level, it is at a very important support level, from where the momentum is now, bottoming out, and hopefully it can see some turnaround as well. The only issue is that when you see the daily weekly chart, there are still some challenges, which is that prices have not broken above the averages and so on. So for me to even call, I mean, to be a more confident on reversal part, I would need prices to break above this weekly averages and sustain above that. In that case, what will end up happening is that it will end up breaking this consolidation zone on the upside, and that will be a good sign. Okay, but as I told you, these are the kind of pattern that also happens around the bottom, where it kind of tests your patience. I mean, you see that open interest was very high over here, we did get a short covering rally, but again there was a decline. Okay, and this was not like a sustained recovery, that we saw in ITC and so on. But at some point of time, that will also happen. Check Reliance. I mean, Reliance, I was keeping a very, very close eye because there were huge shorts. I mean, huge. So you can see over here, the shorts were at an extreme. I mean, you take out 12-year data or so on, the shorts were at the highest and the prices had fallen and it had come back towards the previous high. Now you imagine a stock like Reliance has rallied 50% after that. Okay. And what you notice over here was the open interest peaked out over here. After that also it did fall. Okay, but there was constant recovery each time when it was making. So as I told you, I mean, it might end up testing your patience, but all you know is that the open interest is very high and the prices have come to important support levels. Even if you notice, Reliance at that point of time was somewhere around its weekly monthly average. So this was the chart of Reliance. What you're seeing in ABB, which is say right now around this averages, similar setup was in Reliance, right? I mean, it was around this averages, this important support level was there, and so on. So, you tend to wonder, can a turnaround happen from here or no? Okay. Something very similar thing I had observed in IDFC first as well. Sorry. You see the shorting that had happened. I mean, around here, it was a huge short position. After that also, it did fall a bit. Okay, from here, if you see, it did go down. But after that, it has seen a nice, short covering rally that is, kind of playing out. And it is, now making higher top, higher bottom structures and so on as well. Okay. Now, as I told you, the question that you all might have is that how do I find this, right? So the whole idea is to go to the rollover, try and find where the open interest is at its highest level, and that's where you try to turn around. I mean, you try to expect a turnaround. Something like if you see PFC, huge open interest. You see this. You see something like REC, again huge open interest, right? I mean 6 and it has become 8 crore 76. So you will find, I mean, see, you will need to do a little efforts over here. You just have to check it once, okay, once in a month. These trend will last for a very, very long time, as in when it plays out. So it's worth, digging deeper into this and trying to understand where those higher open interest is, and always understand when the open interest is at an extreme, all you know is that कुछ तो होने वाला है उसमें. क्या होने वाला है that we don't know, and we should not even predict. Let the price action confirm us, and that's where it can become an opportunity for you. Frankly, at this point of time, there are so many stocks that are there where the open interest is very high. Like I told you, PFC, it has, I mean, people have bashed this stock and there is a huge surge in open interest. So you see what happened. Prices were very low. Okay. And after that, there was a huge surge in open interest, which led to a meaningful short position. Okay. But now what you see over here is that there was this important support level which was there, which also broke on the downside and people got scared. But always in such occasions, look at weekly and the monthly chart. When you do that, wait, let me just remove the band. So what you see over here, here is that it has just come to the 40-month exponential average. This was the breakdown. So this was the line I had drawn, and from there it is now trying to turn around. What this means is probably a false breakdown. Of course, if this month, kind of confirm us. So, you need to keep your eyes wide open and see where those opportunities are arising. Okay. that will kind of help you to understand where is it that I mean, how people are positioned. For example, there is one stock, honestly, is on my radar, and I'm not too sure about that, but it's Jubilant Food. So over here also, I mean, you know that QSR is in dumps right now. So what has happened is that the open interest is around the higher levels. Okay. And interestingly, the prices are at a 61.8% retracement approx. Okay. Over here, I am not getting the confirmation of a turnaround yet, but something that I've kept it on the radar, because when I was looking at this rollover data, I think that's where I got this one. So let me see. I mean, I was just checking the 12-month range, and it was within the 12 months towards the higher end of its range, right? You see over here. So, and the prices had fallen. So there is definitely bearish sentiment that is there over here. I'm again telling you, prior to the result season, don't try to bet it. Okay. Try to bet after the result season. I mean, let there be 5-10% moves that go away from your hand. That's fine. Be safe, is what I'm trying to say. Okay. So I think, yeah, broadly, I have tried to explain you with the examples. In case, I mean, if you'll have any questions, please shoot it now. I'll try to address those. Maybe if any other, I mean, if people have any other doubts, maybe everyone can benefit from that, and I can explain you. So please let me know if you all have any doubts. No.
Okay. Fantastic session, Jay. Before we take up the Q&A, this one to all the viewers, those who have not signed up on Strike, web.strike.money, just go to web.strike.money and sign up. You'll get a 7 days free trial. And also users are asking, about what is the other features we are having on Strike and where to, subscribe. So just quickly, 2 minutes, if you can go through all the features,
Yeah.
along with the pricing, this one. Yeah.
Deepak, please don't fidget with the screen. So yeah, I mean, all the features that are there, you will get it on the left side over here. Okay, we have scanners over here. We have built different scanners. Many people like RMI. I mean, with the way that we have built up, there is Dow trend as well. For people who follow price action and they want to find where is it that the turnarounds are happening. So all you can do is that filter out over here, which are now yesterday the Nifty index did give a breakout, right? So which are the stocks that are breaking above previous high? You will end up finding in the signals of down to up, which means that they are breaking above the previous high and they could be looking good. And similarly, there are a lot of interesting data points, or there are a lot of interesting scanners that we have over here. As I told you, I mean, a lot of people do watch, RMI. So they absolutely love it. This is there. Then apart from that, all the insider trading activity, what is happening, which I see very closely. I've done the webinar on that. You can see bulk deal, block deals, insider trades over here. Then heat map, I mean, how to find outperformers. Again, a webinar is done on this. All these webinars, you can find it on, if you go to a YouTube channel, or if you want to also get a crisp understanding of that, in help, basically whatever our unique features are there and there are specific strategies, we have laid out over here. I mean, how to use sentiment indicators and understand what is the market doing. These are all the important. So if you just go through these videos, you will find many unique features that we have built in Strike, which has a specific way of thinking about those things, and it can lead to some good outcomes in trade as well. That is what we have tried to put out over here. So these are the short forms of the video. If you want a detailed webinar on that, like I was saying that, we have also done rollover. So, just type rollover over here and you will see that there are 7-8 videos that have been made. You can see this in the past. So you can just go through them, try and understand the concepts. Again, like I told you, heat map, right? Just type over your heat map and you will understand how to use heat map. Again, we have done a lot of webinars on this. So all these key features that we have, we have done the webinar, a detailed version of webinar over there as well. And these are specific strategies that, you all can look out at. This will help you to scan and filter out stocks more quickly. So do take the benefit of that. And these are all free videos, by the way. So, you can just spend time, understand. And there is already a daily market video that I'm doing, which, where we try to look at the data points and understand where the markets are going in the short term. Okay. So if you subscribe to us on YouTube channel or you follow us on Twitter, daily at 5 p.m. we are going live. Okay. So you can check us over there. Apart from that, we have sentiment data, which I told you, which none other platform has. And we have put it in such a user-friendly way that if at all you just end up seeing the screen, you will understand. And a lot of things are very self-explanatory over here. But again, explanation of this is given in help. Or you can also watch the webinar sentiment indicators. You just type over here and you will find, there are a lot of webinars that we have done. Okay. So all the features, like you see, options, futures, everything we have given. In options, we have this unique screen, which intraday people might find it very, very helpful, which is that where is the highest open interest? Where is it that addition is happening? Where is the liquidation happening? And we have gone one step ahead and made those interpretation as well. So if below support means prices are going below that strike price. Okay. So there is a chance of a bounce back because the put shorters are not unwinding their position. So that way there are interpretation that we have put. And again, we have done a specific strategy webinar over here as well. So